We have the pleasure of introducing the highly accomplished chief guest, Mr. Hemant ji, Contractor, Chairman, PFRDA. Sir is the first chairman to head the statutory Pension Fund Regulatory and Development Authority after notification of PFRDA Act in 2014. He joined PFRDA on 7th October 2014. Prior to joining PFRDA, Sir was a career banker, joining State Bank of India as probationary officer in 1974. During his illustrious career, spanning over 40 years in State Bank of India, Sir served in several important positions, including Group Executive of International Banking, Group Executive of Corporate Banking, and Chief Financial Officer. And Sir rose to the position of Managing Director of State Bank of India. He has also served on the board of several organizations such as State Bank of India, National Security Depository Limited, Nuclear Power Corporation of India. He is a qualified chartered banker from Chartered Institute of Bankers, London. Let us put our hands together in welcoming the chief guest of this gracious occasion. We welcome you, sir.
Very good morning to all of you. Our distinguished dignitaries on the dais, Mr. Srinivasan, Director of the National Insurance Academy, Mr. Nilesh Sate, member from IRDI, and his colleague, Mr. Kutumbe, also member from IRDI, Mr. Aswath Narayan from the Academy, and Mr. Rathi from the Academy, and distinguished participants in this conference. It is a fitting tribute to Mr. C.D. Deshmukh, the legendary C.D. Deshmukh, that this event is being organized annually by the Academy. This being the 20th year of its, since it was started. And the previous speakers have narrated several stories and anecdotes about Sri C.D. Deshmukh and his and the distinguished career that he had. I'd like to add one more to that. During the days of the Raj, you know, when the two international financial institutions were being formed, IMF and IBRD. IBRD was the International Bank for Reconstruction and Development, which later on became known as the World Bank. There was a conference held at Bretton Woods, and the Indian team which went there included Sri C.D. Deshmukh. Now, you know, the agenda for the meeting did not include themes on poverty and development, but Mr. C.D. Deshmukh, through his very persuasive arguments, was able to convince the members there that poverty and development should figure among the coverage about the coverage that IBRD should have, and he was successful in doing that through his very convincing arguments. And the principal economist, in fact, the brains behind this Bretton Woods Agreement was the famous English economist John Maynard Keynes, and he said he was so impressed by the ability, the dignity, and the reasonableness of Sri C.D. Deshmukh that he suggested that Sri Deshmukh head the International Monetary Fund, not IBRD, but International Monetary Fund. Of course, this suggestion was not approved by the powers that be then, but I mean, he was such a distinguished and such a brilliant person that he impressed an economist no less than John Maynard Keynes. I'm sure all of you would know about John Maynard Keynes, probably the most distinguished economist of the 20th century, and he impressed no less a person than John Maynard Keynes through his ability to persuasively argue the case for inclusion of poverty and development. And but it is our loss that his suggestion was not approved. Otherwise, we would have had the first Indian, the first head of IMF to be an Indian. So, and there are many other stories about Mr. Deshmukh, and therefore it is only fitting that a tribute in the form of this annual seminar be held here. And I must compliment the Academy for making it 20 years in a row. And as somebody mentioned, it's not very easy to have this on a continuous basis. And I'm sure, given the enthusiasm of the people participating in this event, this will continue for a much more longer time to come. Now, coming back to this theme of well-being, now I'm very happy that this theme of well-being has been chosen, because conventionally the prosperity of a country is usually measured by the standard economic indicators like GDP and GNP and per capita income and all that. But GDP does not really capture the well-being or the welfare of a people or of a country. And in fact, the person who devised GDP, Simon Kuznets, the American economist, he himself said that the GDP is just a money value of the goods and services produced in the country. It is by no means a reflection of the welfare of a country and its people. But over the years, the GDP has been increasingly being used to measure the wealth of a country, and therefore the welfare and the state of well-being in the country. But it certainly isn't a proxy for well-being. For well-being, you have to look at other issues. Of course, economic wealth is one of the prime elements of well-being, but there are other things as well. There's health, then there's social standing, a person's social standing, his status in society, his mental health, his physical health. All these go towards his well-being, and therefore, well-being is probably a much better indicator of how a person is and how his condition of a person. And also, it's probably a better reflection of the condition of a country than just GDP. And so, it's a very holistic concept, and it is therefore right that we focus a lot more on well-being rather than just on these economic indicators like GDP and GNP. In fact, many countries are now progressing towards this idea. A tiny neighbor, Bhutan, was the first country to come up with this gross national happiness concept. They started this concept in the 70s or 80s, and more and more countries have now warmed up to the idea of looking at indicators other than just the GDP and GNP to really measure the condition and the well-being of its people. And this is a concept which is fast catching on, and this is as it should be. Now, for an individualism, this well-being, what is well-being for an individual? Of course, economic condition is a very important element of well-being, but so is health, and so is the social standing and all that. And as they used to say, they used to greet people and wish him the best of health, wealth, and happiness. This is how people were greeted in the past. It was not just about wealth; it was also about health, and it was also about prosperity. Prosperity being, his social status and standing and things like that. So, it's important to look at this concept holistically and rather than just on the narrow measure of economic wealth. And each is complementary again, Like, there's no point in having a lot of wealth if your health is not good. And similarly, if your social standing is very inferior, or if you do not enjoy the freedom and privileges that one normally gets, then all the health and all the wealth that you have is of little use to you. So all these things are complementary, and they go hand in hand. And it is therefore right that we focus on all these issues together rather than just on one narrow dimension of well-being. Now, for the individual, it is important that the well-being be sustained over a period of time. Now, the sustenance would come in the form of the protection that he would get on account of risks that he runs, that his well-being runs. And these risks come in the form of, economic shocks, like his ability or rather his inability to weather economic storms, or risks arising out of health, or risks arising out of his social standing. So these are risks that he has to guard against to ensure that his well-being is continued. And these risks can be protected through these various financial products that we have. So we have insurance to cover risks arising on account of health scares or life-related issues. And then we have pensions to guard against his being rendered unemployed or his inability to work on account of old age. So we have these protections in the form of all these financial products that are available. And therefore, it is possible for a person, for an individual to continue to have a prolonged period of well-being through these financial products and devices which are available in the market. But the important thing to remember here is that not everybody has access to these products. Not everybody has access to these products. It's only people who have the means to have access to these products that can be ensured, who can be ensured of well-being and continued good fortune. In India, this is the problem that we have. In India, as I think some figures were mentioned, the penetration of these products in the country is far too low for a country of our size. Now we have, like in pensions, I'll give you the example of pensions. In pension, the pension penetration in the country is just about 15% of the total workforce in the country. Now we have a workforce about 50 crores, that is about 500 million people. And pension cover is available just to about 15% of the population. Similarly, I think in the case of health insurance too, if I'm not wrong, the coverage is about 26 or 27% of the population, and life would be probably somewhat lower than that. So these benefits do not reach out, do not get extended to a large number of people, and that is the problem that we have in this country. In India, we have a situation where these benefits, the benefits of insurance, the benefits of pension are available largely to people working in the organized sector. Now this is important here. So all those people who are working in the organized sector get these benefits, and many of them are mandatory in nature. They are backed by law. There are statutory benefits available to people working in the organized sector. So they are pretty well off compared to people who are not working in the organized sector. Now, who are the people working in the organized sector? It's the people working in the government, defense, organized labor, large industries. These are the people who benefit from this kind of risk coverage. So you have, say, in organized labor, you have acts like the EPFO Act, which is extended to factories and companies engaging 20 or more people, so larger companies. Similarly, you have the ESIC Act, which provides insurance cover to larger companies employing 10 persons or more. Then you have this Payment of Gratuity Act, again covering large industries. You have the Maternity Benefits Act, again going to larger units. So these larger companies and organizations are well covered by all these social security benefits. And unfortunately, the organized sector accounts for just about 12 or 13% of the workforce in the country, just about 12 or 13% of the workforce in the country. And that is the problem in India that we have. Just 12 or 13% of the population in the country enjoys all the social security benefits. And the large mass of the workforce which is engaged in the unorganized sector really do not have access to any of these statutory benefits. So even these products that we regulate and promote, the pension products and the insurance products, actually go to these people in the organized sector, because many of them are bought because of the tax benefits that they carry, then because of the mandatory requirements in many cases. Like for example, if you've taken a housing loan, then it's probably necessary for you to buy an insurance cover for the house. So like that, many of them are stipulated by the lenders, And many of them are availed of because of the tax benefits. So many of these financial products that are available in the market go to the same set of people in the organized sector who even otherwise have these statutory social security benefits available to them. The large mass of people working in the unorganized sector usually do not avail of many of these financial products that are currently available. And that is the challenge that we face in the country today. Now, it's not that we have not been trying. I mean, insurance companies, pension providers have all been trying to reach out to the unorganized sector as much as possible. But there are major challenges in the way. And some of these challenges are, the income. The income levels in the unorganized sector are much lower than those in the organized sector. So the ability of these people to buy these financial products is severely handicapped. And added to the problem is the fact that there is volatility of income, because not everybody in the unorganized sector has a job and has a permanent job. Many of them work in temporary assignments and temporary jobs. They're out of work for a period of time in a year. So volatility of income is again another thing. Irregular employment, low incomes. And added to all that is the fact that you have these usual problems arising on account of inflation, which erodes whatever little wealth you have. So the ability of these people to avail of these financial products that are available in the market is very, very low. And we have, from our part, I think Mr. Srinivasan mentioned about Ayushman Bharat. Now, Ayushman Bharat is a tremendous initiative of the Government of India, which will make available very low-cost health insurance to the unorganized sector. Similarly, in pensions, we have this Atal Pension Yojana, which is an absolutely low-cost pension scheme, which has gained a lot of traction. But we've done quite well in the 3 years that since the scheme came into existence. But even then, we've just about scratched the surface as far as the potential goes. So there is this problem of income. It's basically a problem of income. The severe inability of a large number of people. India, the BPL statistics about the country. Almost 25% of the population is below the poverty line. According to all estimates, whether you take the Tendulkar committee or the other committee, all of them have said that the people below the poverty line are in the range of 22 to 25%. So these people, by definition, do not have the means to buy anything significant. And then there's a whole lot of people just above the poverty line whose income is marginal in nature and whose ability to buy these financial products is again very much curtailed and restricted. In fact, in India, the income distribution is so skewed that 1% of the population has 60% of the wealth. At the bottom 30% has less than 2% of the wealth in the country. And these are the statistics which come out, So it's a very skewed income distribution structure that we have in this country, which reflects on the poor ability of a lot of people to avail of financial products and services like insurance and pensions. So what do we do about them? Now, we've been trying, from the demand side, we've been trying to educate people, because financial illiteracy is one of the issues that keeps coming up. A lot of people don't understand financial products, and especially complicated financial products like insurance and pension. It requires a lot of explaining, a lot of hand-holding, a lot of educating to make them come on board. But it's a tall exercise, given the fact that almost 45 crore workers are there in the unorganized sector. To reach out to them is a mammoth exercise. But we've been trying a bit to do that. Now, on the supply side, we've been trying to come out with products which are more suitable to them. I give you the example of Atal Pension Yojana, absolutely low-cost pension scheme. You have to pay just 42 rupees a month if you are of a young age to avail of pension of 1,000 rupees when you retire at the age of 60. Absolutely low cost and simple, transparent, easy to understand and all that. But despite all that, and it has met with success, but despite all that, to reach out to the huge number of uncovered population is still quite a challenge. And I'm sure the insurance industry would also be facing similar challenges and obstacles in improving coverage. Coverage is a major issue in this country. Coverage of the population with these kind of financial products is a major issue in this country. And to my mind, the only way that we can find a fast solution to this issue is if the government steps in. The government has to step in to ensure that the basic social security products are available to the large mass of people. And I'm very happy that the government has taken the initiative to do this. I don't know how many of you have heard about the draft labor code on social security, but it aims at this objective of covering the unorganized sector. The target is that 45 crores unorganized sector workers would be covered under this draft code, labor code. And under this labor code, all these social security benefits in terms of pensions, in terms of health insurance, life insurance, maternity benefits, and all would be available to the vast mass of unorganized workers. And this labor code is currently under discussion. The draft labor code has been drawn up. And if this comes about, then it will be a breakthrough in terms of reaching out and extending these benefits to the unorganized sector. This is badly needed. This is badly needed. An initiative like this is badly needed if you are to cover as many people as possible, because it's only a social security initiative of this kind which will keep poverty at bay for the large mass of people working in the unorganized sector. It's simply because they don't have the capacity to avail of many of these products and services. So the government has to reach out, and like I said, that this draft labor code, which is on the anvil, addresses this issue squarely. And if it comes about, then it will be a real milestone in India's history. And there is no time to be lost. There's absolutely no time to be lost. I don't know how many of you know this again, but we have currently about 120 million people over the age of 60 in the country. And this number is expected to go up to 180 million by 2030 and reach a staggering number of 300 million people by the age of 2050. Even today, when we have 120 million over the age of 60, this 120 million is more than the population of most countries in the world, barring the top probably 8 or 10. So the 60 age group is probably the 7th or 8th largest segment in the world, and this is the fastest growing age group in the country. This, thanks to longevity, thanks to advances in medicine and health, people are living longer. So the 60 plus age group is the fastest growing age group in this country, and we'll soon see a very large number of people who have crossed the age of 60 in this country. And unless something is done about them on a very quick basis, I mean, this problem will continue to fester. And when you cannot keep poverty at bay for so many people, it manifests itself in all kinds of problems in the country. So the sooner we do this, the better. And I hope this conference today discusses about all these issues, because apart from what the insurance companies and the pension providers do, I mean the thrust is also to be on the government to expedite these initiatives which have been taken on hand, and see that they are brought to a conclusion as quickly as possible. So I wish the conference all the best, and thank you very much.
Ladies and gentlemen, we have kind consent of the dignitaries on the dais for question answers. The audience is welcome to put forward their queries, if any, to the panel of the esteemed speakers.
Sir, I am Patnaik. I am asking one question, sir. Actually, I am confused since morning. Sir, whether I should be SB or WB. I mean, I am a human being, at the same time I am a well-being. Should I look at the face or should I look at the Facebook? Should I? And should the human beings particularly, sir, as we are going ahead, proceeding ahead, should the human beings should be perceived as market, or we should think for something of sustainable insurance or sustainable kind of thing, sir? That's my question, sir.
Yeah, let me attempt to answer your question, because it's at a slightly philosophical level, But, the well-being is a concept. human beings are individuals, so that is the basic difference. And the concept of well-being is something which to my mind, really addresses the issue of the human condition. The human condition is not just about his material well-being and his economic status. It's much more than that. It's his mental state of mind, it's his physical health, then it's his standing in society. All these things go to make up his well-being. It's not just wealth alone. So all this focus that has been there on wealth and per capita income and GDP actually misses the point about human welfare and human well-being. So that is the basic difference. And I think rightly attention is now increasingly being focused on well-being rather than just income and wealth. And I didn't get your other point.
It was all revolving around that. Thank you, sir.
Myself, Sumit Kumar. I just want one question from PFRDA, the chairman, sir. As I know that NPS is working as a trust, whole NPS concept. And my question is, if the person that's covered in NPS, National Pension Scheme, is die before 60, or even starting their job, so any idea from the government side or your side that you just put one more option, a term insurance and that environment? Like there are five different types of, what is saying?
Insurance.
Options, like one is, and I just want to put on term insurance in that NPS. Is it possible in future?
I couldn't quite get your question. You are talking about the choices available to subscribers.
No, choices is there. If the person die before 60 or they starting of job, then no option for the person if he die before 60 or before 40, the family will not getting pension, like an old pension scheme. If I put one term insurance product in that environment, yes.
See, right now the way it is structured is that if a person dies before the age of 60 in NPS, then the amount standing to his credit is handed over to him. There's no need to buy an annuity at that, for the survivors. So it's the lump sum amount. So what you're saying is that a term insurance should be built into that, so that
Yes.
the lump sum amount could be given to, could be made larger. Yeah. Okay.
Very good morning, sir. Right from the opening up of the insurance sector in 91, we have been hearing that the future of business will be health and pension. Though there are 26 health insurance companies also. At a think tank level, has there been any idea to form or float a company for pension business separately, where they will sell the pension products in open market as is health insurance and life insurance sold?
Okay, let me try to reply to your question. No doubt, Raina, there is a need for an exclusive pension company. But still, the issue is pensions are even now regulated by two regulators. Actually, government has to take a stand as to who will do this in entirety. This is one part. Second is, pension is the most risky business. It is not the life insurance, but it is the pension business, because of which a lot of insurance companies, they fail. And I'm not quite sure whether companies will be interested in starting an independent pension business, which will be accumulation as well as payout, both. Right now, there is no such structure available. Insurance companies are accumulating and paying also, but PFRDA is accumulating and not paying. For payout stage, it comes to insurance companies. We all know that the risk of dying soon and living long both are covered by insurance. But as of now, there is no independent annuity company which has come up. But there is a scope if they are ready to undertake so much of risk. Because as I said, the exclusive annuity business is going to be very risky business. Especially in the wake of government doesn't want to have long-term borrowings now. Government's debt policy indicates that they should keep on borrowing less and less. As a result of which there will be asset liability mismatch. The life expectancy is going up as it is from 60 years when somebody retires, if he's going to live for 120 years. Then for 60 years, how assured annuity can be paid. These are some of the big issues which come up. And that is why I'm very much doubtful if any industrialist or any capital venture company will be in a position to start an exclusive annuity company as such. But then, okay, there is a scope, no doubt about it.
And just to add to that, these pension providers that we regulate, these are actually specialist pension companies, and they do nothing other than manage the investments of pension funds. But even there, as Mr. Sate said, they handle the accumulation up to the accumulation stage. And when it comes to actual payouts, we do fall back upon the insurance companies for the annuities that they provide. The annuities are provided by the insurance companies and not by the pension funds.
Good morning, sir. My question is to Chairman of PFRDA. Sir, we have seen in the last 4 or 5 years, there's a massive campaign by mutual fund companies to create awareness for savings and SIPs, etc. And you are also, in your inaugural address, you have said that there is a lot of gap is there, particularly in unorganized sector, for individuals providing for themselves in old age. I think there's a urgent need from supplier side to create this kind of awareness program campaigns so that people are planning themselves for their old age, etc. Is there any plans from your side, sir?
It's an ongoing thing, but like we also, we do advertise and we do have all these social media set up, and the website contains a lot of. In fact, 3 or 4 websites are there which are which focus on the retirement and pension planning and all that. But the problem is that more of financial illiteracy, because of the fact that not many people are financially literate. So even if you try and explain to them through these various channels, it doesn't reach out to as many people as you would like. So what we have done is actually we have set up this training agency which trains the distributors of our products. So all the bank officers and we distribute our products through bank offices and post offices and some NBFCs and all. So their offices are trained by us in the pension products, and then they in turn talk to their customers about these products. So it is it's a vicarious kind of messaging, but to reach out to so many people would really require a massive budget. If you were to really advertise on a very large scale and all that. So this is what we have been doing, through the means of the bank officers and the post offices and the NBFC officials, to reach out to their customers through these training programs. But you are right; it's a big issue. It's a big challenge.
Thank you very much. Ladies and gentlemen, Seminar Coordinator, Chair Professor Life Insurance, Sri Rat, to kindly come forward and present the vote of thanks. But before that, a brief introduction of Sir. Rat Sir joined NIA as Chair Professor Life Insurance. Prior to joining NIA, Sir has served Life Insurance Corporation of India for more than 3.5 decades, during which Sir held many positions, both executive leadership positions, in all the operating areas of life insurance, including marketing, pension, and group business. Sir has also served LIC Housing Finance as General Manager Marketing and led the College of Insurance Mumbai as Director. With this brief introduction, Sir, may I request you to please present the vote of thanks.
Honored Chief Guest, Mr. Hemant Contractor, Chairman PFRDA, Mr. Nilesh Sate, Member Life IRDAI, Mr. Praveen Kutumbe, Member Finance IRDAI, my director, NIA, Mr. G. Srinivasan, my colleague, Mr. Aswat Narayan, invitees, honored invitees, guests, panel speakers, colleagues from NIA, participants of different programs, PGDM students, and invitees from other countries who are now participating in the comprehensive technical programs. This is the 20th edition of our this event, C.D. Deshmukh Memorial Seminar, which we do annually. And continuing for 20 years is not an easy task. It has been possible with the active support of all insurance companies currently. Earlier it was only LIC of India, currently all other insurance companies and all other stakeholders and service providers. It's not an easy journey because same thing doing again and again for 20 years with different subjects. It is always a difficult task, but we have been able to do because of all of your active support. So I will take this opportunity to thank you, all of you, and special thanks to our chief guest, Mr. Hemant, Contractor. Probably he is participating in this chief guest for the second time. In 2016 also we invited him to this C.D. Deshmukh seminar, and he was the chief guest at that time, and in 2019 again we have invited. Thank you, sir. He has, with all his commitments and engagements, he has agreed to be the chief guest and interact with all of you and address all of us. I take this opportunity to thank him. I also take this opportunity to thank Mr. Nilesh Sate, member Life IRDAI, to give his consent to come over here. Though probably for last 3 years he has been kind enough to be always there. At least last 3 years I have seen, because this is my third conference seminar that I am organizing. So I see him for the last 3 years. It is kind of him that he has always been there. Mr. Kutumbe has joined this year only in IRDA, and he has agreed. Probably they had no option, so I do not know. So they have, and he has given his consent. I thank him from my side and from NIA side. I will also take this opportunity, though it may not fit into the place, but our director, he has joined recently, just a few days back. So he has taken a lot of pain in organizing this along with all of our members. So I also thank him. I also thank all the invitees, guest speakers, whose term will come later, in the sense the panel discussion will start after this inaugural session. I take this opportunity to thank all of them. I thank all the participants, invitees, guests, students of PGDM, organizers, and all other service providers. Without them, this would not have been possible. And I take this opportunity to people who are not present also, who have been contributing a lot for last 20 years and who have not been present.